Hello everyone, my name is Mohan Babu, Head of Insurance for Continental Europe at Infosys. I'm based out of Amsterdam. I'm joined in today by a very distinguished set of panelists for an online chat session titled Building Resilience for Corporates, the Role of Commercial Insurers. The panelists are Samrat Dua, Chief Innovation and Transformation Officer at Swiss Re Castle, Kannan Amaresh, Senior Vice President and Global Head of Insurance at Infosys, Zawisza, Vice President of Research and Consulting at Novarica. Once again, good morning and a warm welcome to all of you.
Morning.
The world is going through a pandemic. The impact of COVID-19 on businesses across sectors, irrespective of the size, location, geography, is enormous. Commercial line insurers have been heavily impacted and have taken on significant losses because of business interruption related damages. Given the context, Samrat, Deb, and Kanan, I thought, considering the sectors you represent and the strength you may have from your professional expertise, to have an engaging discussion with a set of important and interesting questions. Before that, Deb, can I call upon you to present Novarica's viewpoint on business and technology trends as applicable to the commercial line insurers?
So hello, everyone. Deb Zawisza. I'm a VP of Research and Consulting at Novarica. Novarica is an insurance technology research and advisory firm that supports over 350 insurers in North America. So happy to be here with you today to be able to give you an update in terms of what we're seeing from a commercial line trend standpoint. As we really assess the commercial line market, one of the things we've seen as carriers have initially gone into the pandemic and then started to rethink their strategies as a result of the pandemic really lasting longer than I think many had originally anticipated. The focus for carriers is to really drive down the cost of service, helping to also refine pricing and underwriting, and growth in this market, which has become even more competitive as a result of the pandemic. And this is especially true in small commercial and program space, which has been garnering a lot of activity over the course of the last several years and certainly has accelerated as we've looked at this market space in 2020. One of the key capabilities for commercial line carriers, no surprise, is really the ability to have strong distribution capabilities. Investing in digital data and core systems is critical to be able to engage distributors effectively, and that holds true for larger carriers as well as smaller carriers as they engage this really important distribution channel in ways that make it easy, seamless, and enable distributors as well as carriers to scale without additional expense. So a super critical capability that we're seeing a lot of interest and investment in for commercial lines carriers. Another key strategy that we're seeing is really a focus on data, looking for new sources of information, new data to acquire new insights, particularly in underwriting and claims. So how can additional information help identify different kind of risk profiles, selection patterns, or from a claim standpoint, fraud or claim loss management opportunities and techniques. Artificial intelligence and analytics, including machine learning, are really becoming a key capability as we look at the underwriting space. These technologies and capabilities are helping to really improve risk selection so that carriers really have the best information available to make the best decision about the risk and how best to underwrite it and ultimately price that risk as well. As we look forward to 2021, we're seeing the majority of property casualty insurers having steady budgets. However, the cuts are more likely for property casualty insurers, which we began to see in mid-year 2020. You'll notice in the red bounded part of this chart, that large P&C carriers expect a 33% decrease in spending, while mid-sized P&C carriers expect a 25% decrease in spending. So that's a large significant shift in investment in technology as carriers are heading into 2021. We completed a mid-year assessment of commercial lines carriers, and the mid-year, carriers really wanted to pivot towards how can we save more money in terms of operational efficiency and really controlling costs, as well as digital experiences. So with the pandemic, many carriers realized that their manual processes in the middle of digital processes were creating problems for service levels, for continuity of carrier resource, as well as those manual processes often required employees to go into locations that had been closed for pandemic reasons. So a lot of focus on really improving that digital experience mid-year to create a much more continuous digital engagement for customers, for agents, as well as for claimants throughout that life cycle. However, as we've surveyed our carrier base, as we're heading into 2021, carriers' priorities again are focused on speed to market, analytics, and supporting distribution. These capabilities enhance the need for carriers to continue their growth strategy. So they're focused very much on acquiring new business, retaining existing business to help ensure that they've got a strong top line orientation to their financials. From a technology standpoint, there are several top tech priorities. Not surprisingly, business intelligence and analytics ranks very high with commercial lines carriers. Policy administration platforms, claims, and agent and customer portals are also critical initiatives that are most likely underway, but will continue to see enhanced investment and activity. From a business intelligence standpoint, we are seeing carriers really orient themselves to focusing on data quality initiatives to begin with. I think the recognition that having a good source of data rather than any source of data is really become a priority for commercial lines carriers. And given the vastness of data in commercial lines, from an underwriting as well as from a claim standpoint, this requires a good focus and a good discipline and practice around managing data, so business intelligence actually can yield the results that are needed. Policy administration system upgrades are really being invested in to improve product flexibility and shorten time to market. So more flexibility in how products can be managed, as well as getting those products out quickly to take advantage of really the changing dynamics of market cycles that we're seeing. Claims administration systems are another key area of focus for commercial line carriers. Benefits have been certainly attained from these efforts, particularly in the areas of operational efficiency and better insight into claim patterns. But other carriers are taking much more of a gradual approach at looking at the overall claim ecosystem and investing in different components that can either yield loss cost or loss adjustment expense benefits without a wholesale upgrade of their core claim system. And lastly, and certainly probably most importantly, really creating the right type of functionality for agents and policyholders is a critical focus for commercial line carriers. That digital experience that enables constituents to operate effectively from anywhere has become a crucial imperative for carriers, again, as they've recognized how oftentimes their manual and paper-based processes have been an impediment to effectively managing and processing business through different situations in the pandemic.
So I work for Swiss Re, and at Swiss Re, we take our mission to make the world resilient very seriously. And making the corporates resilient is a key part of that mission. And specifically at Swiss Re Corporate Solutions, where I work, we provide traditional, non-traditional, and innovative risk transfer solutions that make our corporate clients more resilient in terms of their balance sheet protection, or it's in terms of earnings volatility reduction. Also, what we do is we provide risk advisory, risk engineering services to our corporate customers that helps them with risk mitigation, risk protection. But in case a loss happens, then we are there. We are there to help them rebuild their businesses more resiliently. Now, what we see three key areas of growth for us. So these are opportunities where we also feel our customers will benefit by becoming more resilient from these opportunities. Number one is in this area, we call it innovative risk solutions. So a lot of our corporate customers, they come to us for innovative NatCat parametric risk covers. They come to us for structured fronting, for captive solutions, multi-year, multi-line deals. So this is one area where we do very well. So we pride ourselves in innovative risk transfer solutions, and we see an increasing demand from our customers for these kind of solutions. So also the captive solutions specifically, there are lots of corporates who would like to have captive-like economics, but they don't have captives. So we even provide virtual captives where we offer our balance sheet, but the economic is very similar to a corporate having a captive. So this is one area. The second area that I would highlight to you is that of international programs. So a lot of corporates which have exposures around the world, their centralized risk management teams, they want to buy insurance covers globally for all their operations around the world. And here we have invested in building our own proprietary patent pending technology. And that helps us provide service to this very complex business segment. And we also provide greater contract certainty to our customers. As you've seen with COVID-19, contract certainty has become a very important topic. So through a combination of our unique product, we call it OneForm, and our unique proprietary technology platform, we are able to offer these international programs with greater contract certainty, greater contract transparency, and greater level of servicing. So this is the second area where we see growth opportunities and customers coming to us increasingly. The third area I would like to point out, this is around risk advisory and data-driven services. So a lot of our customers from manufacturing, auto, logistics, they've started to come to us. They share their data with us. We take the data, we combine it with our own data, and we provide them with advanced analytics around their supply chain. So as we have all experienced with COVID-19, supply chain resiliency was a key topic for the corporates. So we are able to use our analytics and our data sets combined with the customer data and provide them with these rich insights around supply chain. Another theme that's becoming increasingly important is that of climate change. So here Swiss Re has vast amount of NatCat data. So we leverage that and also the future trends around how the climate change is happening and what kind of impacts it could have on our customers, whether they are real estate customers. So we also provide advisory around that. ESG is another theme that's becoming quite important, environmental, social, governance related themes. And again, our customers come to us and we provide these kind of services. I would also highlight some more forward-looking themes, especially around data. So Deb, you spoke a lot about data and analytics, clearly a very important theme for commercial insurance. What's also happening is the digitalization of our customers. That's creating vast amount of new data sets that were just not available before. And Internet of Things, or IoT, that's a perfect example. So here I can share with you one recent example of a partnership we have established with Hitachi. So that's an industry giant, right? Industry partner. And they have invested a lot in building software for predictive maintenance. So OEMs, plant manufacturers, plant managers, they have lots of sensors, IoT devices on machines. And what Hitachi does is they collect this data, and based on that data, they apply artificial intelligence and they provide predictive maintenance. So it leads to new kinds of business models, equipment as a service. And what can insurance industry, risk industry do by linking risk and insurance propositions to these equipment as service models? So this is really an example of where the industry is moving. Big untapped potential, new data sets, but that's again an area where we increasingly see interest from manufacturing customers and a wide variety of customers.
Given the broad areas you highlighted, how important is the role of data and advanced analytics for Swiss Re? And do you foresee any role of specialist technology partners and insurtechs at Swiss Re Corso?
So number of themes in this question. Let me start with the data and analytics. This is a theme that I'm very passionate about, even personally. And I really think this is one of the most important themes for our industry. Insurance by design, it's a data-driven industry. So that has been there. But what's happened is with the more recent developments in analytical techniques, machine learning, AI techniques, so some of the things that are possible now with technology, cloud computing, those things were not possible even 5 years ago. So that's one development. Second development that's happened is vast amount of new data sets, whether it's social media, IoT data that I spoke about. So that's the other development that's happened. You combine the two themes, new data sets, large data sets, and new computational techniques, these statistical computational techniques like machine learning, that opens up a lot of new avenues for the insurance industry. So just as a theme to go for more forward-looking data-driven solutions, that's a key area for the insurance industry to tap into. Great opportunity. I would even say some of the basics, like how does an insurance company leverage its own claims data, like just its own loss experiences, and uses that for portfolio steering to improve its underwriting, to improve its reserving. So even those kind of things, which I would say are the basics for a modern insurance company, even there is a lot of potential with data and advanced analytics. So at Swiss Re, we take this topic very seriously. We invest a lot. We invest in big data technologies, data lakes. We apply machine learning techniques, and we try to gain greater insights for either running our own business better, like a modern insurance company, or providing these insights also to our customers, like the example I gave you earlier with Hitachi. So that's on the data and analytics. Let me pick the second theme one that you brought up. Very interesting theme, partnerships, especially with insurtechs. So we a few years ago we used to think about corporate venture capital, right? So like a lot of insurance industry players do, but the model that works very well for us is actually that of collaboration and partnerships. So we don't do by default corporate venture capital, but we find those insurtechs that have a unique proposition. And they like to work with us because we also bring very deep risk insights. We bring great brand name, access to customer. So we have several examples where we have partnered with insurtechs. Eigenrisk, ICI, Groundspeed, these are some of the companies that have very unique propositions related to artificial intelligence, NLP, visualization for NatCat exposures. So really our model is rely on partnerships, and it's a win-win kind of a proposition. Thirdly, I should mention also the partnerships with tech giants. So we have done partnerships with Microsoft, we have done partnerships with Google Alphabet, and these are publicly available information, so I can openly speak about that. And we believe that through these partnerships, again, we can create win-win propositions for them and us. They have deep tech expertise, we have deep risk insights, and through these, we can serve our customers better. Lastly, we also rely on partnerships with industry players like Hitachi. So our partnerships are not limited to insurtechs, tech giants. It's also partnerships with industry players like Hitachi. So we feel through these partnerships, we can actually support our customers much better than we would be able to do alone.
Samrat, at Infosys, we work with a number of commercial insurance providers and brokers in US as well as in Europe. Kannan, you have been having conversations with a number of leaders and a number of these companies as well. Can you provide some insights based on the discussions on some of the common focus areas and how these companies are remaining resilient from a commercial insurance providers themselves and how they are making their own customers resilient as well?
Yeah, absolutely, Mohan. Again, thanks for being in this, inviting me into this panel. Great conversation so far, Deb and Samrat. I think, at the start of the pandemic, I think there was a lot of denial in the U.S. industry as well as U.S. government. So, if I look back in early March, things were looking like as if it's not going to hit the U.S. shows. It's not going to be there. So let me start there because, there is a reason why the industry listens to the government in a big way to make sure that everybody is safe. All the industry is working together to pushing the economy. As obviously, as we work with our clients across the board, more so in US, I have these regular CXO conversations saying, okay, what's going on in your organization? How are you reacting as we hear the news about the pandemic, spreading fast? By the time it hit about end of April, May beginning, I think there was a very good realization that, hey, this is a big problem for North America as well. It is not just in China or in some parts of Europe. And the conversation suddenly shifted from, hey, we have to, speed of reaction to this whole pandemic became paramount important. So what that meant is, one, perception of being closer to your clients, be it a broker channel or be it a distribution channel or be it the end customer, the carriers had to really double up on the perception of being very close to the clients. So what that means is proactive reach outs, proactive channel talk, all of that was going on. And in parallel, they also need to step up their operations because hitherto, if they were relying more on, let's say, the distribution channel, like maybe once in a quarter or once in 6 month kind of conversation, the velocity of conversation went up through their operations. So they had to really be close to the customer. Here I will drop on the small and medium enterprises in the commercial insurance, which is even more put at a big risk, if you will, especially in the US. I think the government actually came out with this big PPP schemes and so on and so forth to step up to support the small and medium enterprises, which is very, very important. If I look at that particular segment, it's probably the most impacted because of pandemic, both on the business side as well as on the employee side. I think going back to what Deb was talking about, both the coverage issue is not just the property and the assets, the commercial, the supply chain risk, but also the actual employees. Because you had an unemployment problem, you had issues on health and so on and so forth, right? So in that sense, that perception as well as the reality of being closer to your customer and also look at what's going on. So that's the first part which I noticed. The second is really the carrier's own financial health because I think the auto industry went ahead and gave the premium furloughs much ahead with discounts and stuff like that. So obviously there was a trust issue in the overall industry saying, hey, what's the perception of the risk and what is the premium we are paying? So in some sense, the carriers had to preserve their own cash flow. So what that means, take off all the change budgets or like discretionary focus on ops and technology or whatever else was going on. So they went into a little bit of a preservation mode of cash flow for the 6 months, and of course they also need to take care of their employees and the extended ecosystem. So that's really the second focus. The last one I would say is, of course, as a fallout, we are almost 9 months into the pandemic. Hopefully, we'll come out of it in a few months. The small medium enterprises top line dropped because of shutdown or partial lockouts, depending upon the location and region, and you had a huge impact on the premiums. What it also meant, as Deb was talking about, multitude of data and the kind of risk assessment the carriers were doing had to be doubled up. So you what you were doing before pandemic, let's say assessing an SME customer, and you were doing a risk assessment and providing services. again, taking a leaf out of what Samrat you were talking about, risk advisory services, risk engineering services came to the forefront because the SME clients need to focus on both the risk, the cash flow, and the predictability of event not happening. So I think I see a lot of focus on that, how careers are coming forward. I think it's a great story so far, Samrat, from your side. That's pretty much what's going on across our clients who are focused on the commercial insurance.
Do you think that the political and regulatory environment can threaten the resiliency of the carriers themselves at this point in time?
It's interesting, the political environment, particularly in the US, is, going through sort of dramatic change, to sort of understate the obvious. And I think, from a pandemic standpoint, I think 2021 will clearly bring a different focus and a different type of response to the pandemic. Although there has been a fair amount of discussion from a political and a regulatory standpoint around pandemic-related coverages, responses, crossing, all spectrums of insurance, personal lines, commercial lines, and reinsurance. I think everyone understands the importance of a healthy insurance ecosystem. So carriers, as well as legislators, certainly have been working towards that, although sometimes coming from different angles in terms of protecting policyholders versus insurance companies. So I think it will be certainly an interesting couple of years as we work through the pandemic, and as certainly there are dramatic shifts in our political infrastructure in the US. However, carriers are also really, I think, much as Samrat's talking about data, I think they are looking at that data aspect and really figuring out how to be much more well prepared in the event of the next pandemic. Pandemics such as SARS and Zika certainly put a focus on pandemics. However, they didn't certainly reach the scale that COVID-19 has impacted everyone globally. So this data around the pandemic from a claim standpoint, from an underwriting standpoint, I think is going to be crucial to really help determine the correct pricing strategies, retention strategies, as well as coverage opportunities. So there are a lot of new interesting coverages that are under consideration as a result of the pandemic. Some have gone to market, some haven't. Very much focused on, program types of businesses. And I think that's certainly an area for the industry to respond, ensuring that pricing is adequate, ensuring that there are effective risk mitigation strategies as well. Samrat talked about that. And I think, interestingly enough, when we think about cyber insurance, where that was kind of new, maybe 7-8 years ago, carriers are now looking at combining pandemic response capabilities as in conjunction with pandemic insurance. So much like there are breach coaches in cyber insurance, some carriers are considering pandemic assistance to really help companies work through the various stages of response. And I think what we're seeing as well is that constant ebb and flow of, surges of cases, them receding, and the implications to businesses in the broader community. So I think those things are really good. There has been a fair amount of, insurance companies, I think, being fairly aggressive from a litigation standpoint, particularly as it relates to business interruption and workers' comp. Those challenges really are to focus on the underpinnings of what an insurance contract is intended to be, not what everyone would like it to be. So I think, policy language will continue to be refined. And as those various cases come through the court system, will again provide some interesting precedent for future actions and considerations for carriers as well as policyholders to take into account when purchasing coverage. So certainly a lot going on, from an industry standpoint. Again, data is the underpinning of it, understanding the characteristics of the risks, how they're emerging and maturing. The do view that there will be longer reaching implications from the pandemic than certainly what we've had in the last 9 months. And I think we really don't know what that will mean until the data starts to emerge and we see the results of what's happened.
Deb gave a number of pointers. Do you see the regulations becoming more stringent, especially around coverage wordings, or do you see a cooperation between the insurers and state and the governments at large?
No, so first of all, Deb, I found your perspectives really great. So you gave such a broad perspective, and you spoke about a number of themes that are just super relevant for the commercial insurers. Now, let me break your question into two separate themes, Mohan. The first theme is really around some of these large systemic risks. So whether it's a pandemic risk, or I would even put some global cyber attacks, so cyber-related risks, and these really large systemic risks, which could have so much accumulation, right? So we could really see that Armageddon scenario where the risks are just too big for the balance sheet of the private sector. So we really see the potential for private-public sector partnerships. So at least that's the view we take at Swiss Re, but also the industry at large. There are a number of discussions between the private sector and the governments to try and come up with joint solutions. So insurance as an industry is very strong when it comes to understanding of risks, modeling of risks. But when these are systemic risks, the balance sheets of the private sector, of these insurers, will not be large enough. So that's where, if there is a partnership between the governments and the insurers, we can create solutions like what we have seen with terrorism pools. So we can see creation of pandemic pools. And some jurisdictions around the world are already thinking about it. So I feel this whole area of private-public sector is what would be needed for some of these very difficult problems to actually make our society more resilient, right? Not so corporates and the world more resilient. So that's one. The second theme, Mohan, that you brought up, and Deb, you also spoke about that, this has to do with the coverage wordings. And what happens is, whenever the insurance industry goes through a soft cycle, usually as an industry, we become a bit lax, and then the terms and conditions become a bit loose. That's what has happened. And now we have the market becoming hard. And also we had COVID-19. And we have experienced COVID-19 brought to the forefront some of the loose or ambiguous wordings the insurance industry had, especially around business interruption. And different jurisdictions interpreted them differently. But at large, we as an industry have to tighten this area. So because our customers want more transparency around what they are buying, they want more contract certainty. So what I see happening is that overall the industry, the carriers, the brokers, the customers, that they will work together and they will come for more unambiguous coverages. Because that's the need. Otherwise, the insurance industry also runs the risk of losing its credibility and the trust of the customers. So I see that as a need for the industry to get stronger in this area of policy wordings.
I think we had a very interesting conversation. Thanks to all of you. Once again, thank you for all taking time out of your busy schedule and enrich today's discussion with your viewpoints. Truly appreciate the time and the effort. Thank you.
Thank you.
No, thank you. It's great to be a part of the panel.